It's time now for our Muni moment, and we want to get some insights into what's going on the ground in state and local municipalities that have, well, been dealing with weakening economic conditions, well, a drop in tax revenue, and some concerns here about their own levels of fiscal spending. All of this, of course, comes against the backdrop of a downgrade by Fitch for the federal government's AAA rating. Arlene Bohner joining us right now. She's the head of U.S. public financing at Fitch Ratings. And Arlene, we should point out, you obviously had nothing to do with the rating downgrade of the federal government, but we'd be remiss in not asking you a bit about how, if at all, what we see on the federal side ties in to the local side when it comes to the credit quality there.
Sure. Thank you for having me. As you know, Fitch has a separate team that handles sovereign ratings for the U.S. and countries all around the world, like the ones you were just talking about earlier. And that's separate and apart from the U.S. public finance team. Most U.S. public finance ratings will not be affected directly by this action. There's a small subset of ratings that we have publicly identified as being directly tied to the U.S. sovereign rating. We did place those on negative watch back in May, right after the sovereign rating was placed on negative watch. And we said at that time that they would be downgraded if the U.S. rating was downgraded. So we're looking at those ratings right now. We're verifying those linkages and working through that right now.
When we look at the municipal market here at the state and local level, this was a market that I think to a lot of people defied a lot of expectations during the pandemic. A lot of municipalities actually found a way to improve their finances during that time. And there's some concern, though, that whatever benefit they might have had in 21, 22, even 23 at the start of 2023, that has now worn off. And maybe their financial conditions might actually end up weakening going forward.
So we are starting to see the wearing down of those margins that had been built up during and post-pandemic. A lot of states in particular had generated large surpluses that fell down to their bottom line. Lots of reserves that they were able to generate in that respect. A lot of that came from consumer balance sheets because consumers were spending and generating a lot of sales tax income for states. We think that for the most part, the effect of that, all of that stimulus money that was on consumers' balance sheets will be gone by the end of this year, likely. There'll be some left, but the part that's left, we think just isn't going to be spent. It's on high net worth individuals' balance sheets, and they won't be spending that down. So the effect of what's going to be spent, we think probably will be spent by the end of this year. So states that had seen booming sales tax revenues are now seeing more moderate increases on a year-over-year basis in their tax revenues. If you look at where they were, say, last fall, they were maybe, 11% year-over-year growth, whereas this spring we're looking at more normal levels of about 2 to 3% year-over-year growth.
And Arlene, looking into the future, the expectation still seems to be that we get some form of a recession in 2024. Whether it's mild or something else is subject to debate right now. What are you seeing among states and local governments as to how they're potentially budgeting for that possibility?
For the most part, we've seen very conservative budgeting on the parts of states and municipalities. There are some states, actually, a surprising number of states, have taken some tax policy action. They've had these large surpluses that they've generated and have wanted to adjust their tax policy to reflect that. So some of them with one-time measures of kind of refunding money back to taxpayers. And in other cases, more permanent tax policy action has been made. So those are items that we are keeping an eye on, and we want to make sure that states continue to budget conservatively, which up till now they have, and that they're able to continue to fund their ongoing spending requirements.